On the FAO, let me just quickly introduce what the FAO section is. So we are about 500 people strong team. The revenue size is about 26 crores on the run rate as on date for FAO. We are serving 70 plus clients in India and internationally. We are doing 100 plus engagements, which are the SLA engagements with these 70 clients, and that's quite a number in the domestic BPO segment. So these are 100 discrete projects. So it could be
more than one project in one client.
That's right. Perhaps that also indicates the penetration in the same client place, and also existence of the large clients in the FAO kitty. And I'm not covering in these 100 the HRO engagements. So these are purely FAO engagements. We offer on-site and off-site complementing solution. Now what does that mean is that we are offering a complete solution in a given situation. So if we talk of payables, then we are starting the leg when the invoice is received by the client. So that invoice receiving is done by the mind then in the solution. Or if we talk of a accounts receivable solution, then we are the ones who go to the client and provide those field services or recovery services to get the money back into the business. So and not
we would follow up with the
we would follow up with the customers of this client.
Customers of
That's right.
client.
That's right. That's right.
We would speak as if we are the customer.
Absolutely. So we do that, and typically that happens in the front end. So these are all interactive services, if I may put that way. And then we have a complementing solution at the back end where the collection, once done, gets accounted. So those are the back office activities that we look into. In terms of capability, FAO runs 200-seater back office facility. Out of the 500, 200 are the back office bodies. Now these are primarily based out of Gurgaon, but the capability of running back office lies in Bangalore and Mumbai as well in Chennai being the smaller one. The rest of the staff is distributed in 22 odd locations. I saw one of the slides that Vivek was covering. So most of those locations that I think you were putting up in that slide. So FAO is present in those locations, and let me also give you a little bit of background here. We work a lot with telecom, service providers segment, and we happen to manage receivables or payables or any of these activities in all of their circle offices, and there are 25 odd circles in India. So leaving some of the very difficult terrain, let's say on the eastern side, Nesa we go up till Assam, J&K we are present in, let's say, Jammu, and not, let's say, in Kashmir or far off sectors. But other than that, almost all entire India length and breadth gets covered through these 22 locations. These are, you can think of all the state capitals and the tier 1 locations. The back office processes are all certified, which majority of which is payable section. So that's all certified. ISO is implemented. So our growth over last few years, if you see, or right from the beginning. So telecom has been propelling that, I would say, because telecom has grown in India and has reached places, we have gone along with them in almost all the circles doing various activities. Very recently, the same phenomena in the tech startups, in the e-commerce, retail, tech startup companies, and you will find that we are doing work with some of the very good brands, Flipkart, Snapdeal, Amazon, Grofers, and these are not just the classical processes that we are doing. So one thing that you'll understand while working here is that innovation is very key to our industry, the service industry. And what FAO is doing today is going to these brands and logos by offering them innovative solutions. So none of these, the good part is that we are not providing a same solution in two different places in the tech startup, and that's the beauty of the whole thing. So let's say Grofers is taking our cash management services, and they have this problem in hand where they are kind of present in 10 cities and 200 outlets, and when you go to their application and order something, a person goes to the merchant outlet, picks up the material, comes back and delivers at your doorstep, and then you pay, because most of us like to pay as cash on delivery. And that what happens to that cash, how the company is managing that cash. All right, how does Grofer make sure at the end of the day that the cash that they had given away to the merchants is getting recovered back from the customers on the same day? So there's a huge exposure in the market for Grofers, and we have entered with them, and that's one of the key business processes that we have taken up, and we are providing solutions. I'll take you through in detail on that solution. That's quite exciting. Likewise in Flipkart. Now Flipkart, as you must be aware of, that Flipkart started up as a vendor, as a trading unit. It's not really a pure play marketplace, if you understand that. So they would buy from the vendors, stock it in their warehouses, and then deliver it when you go and check out on their application, right? So that's something that they have been doing for last few years, and now very recently they have now got into a pure play marketplace. So while they were doing so, the vendors, the dealings with the vendors were very frequent, the transactions, the size of the transaction, the frequency of the transaction, and the value of the transaction. So these were very typical things, because when we entered the scene with Flipkart, they were doing close to about 50,000 transactions a day, 50,000 orders a day. 50,000 orders a day, which means that the number of transactions will be at least 3 or 4x of that, because each order will entail multiple items to be taken up from multiple vendors and then supplied to the customer. And today they are about 100,000 plus per day. Orders. All right. So that's the magnitude at which they operate. And when we entered, they were about 30,000 transactions a day, and then they have scaled up to 100,000. Now, the typical need was that you have sourced material from all different vendors. Somebody was selling books, somebody is selling magazines, somebody is selling clothes, electronics, mobile phones, whatnot. And you have those typical terms of trade. If I buy 5,000 Apple iPhones, all right, I'm going to get 2% extra. So if I buy 5,000 Apple iPhones in the same month, I'm supposed to get 2% extra. So volume based discounts, value based discounts, all right. Or if I bought 500 packets of a particular merchandise and 5 of them were not okay, then I'm not supposed to pay the vendor for those 5. Okay, but by the time I realize that, at least 10 more orders have gone to that vendor. So you have those vendor level engagements where the business is doing its own bit of managing the commercial arrangements, but somebody has to get into those technicalities of whether on a particular day whether how the settlement between the vendor and Flipkart looks like. All right. So there is, and in e-commerce, every company has a way to manage it. Some call it a seller experience team. Snapdeal calls it a seller experience, which is a very large function in the company itself. Some call it a vendor help desk, where the vendors can call up and check. So we happen to manage for Flipkart the entire of their vendor reconciliation. So we are responsible for making sure that 90% of their purchases over last 3 months is reconciled to the tune of paisa in the following 3 months. All right. So if I bought let's say going by the value and the volume, if they bought say about 3,000-4,000 crores of merchandise in the last 3 months, then I'm supposed to reconcile say 4,500 of this in the following 3 months with the SLA of meeting minimum 90% of this value, and we have been achieving that quarter on quarter for last 8 quarters, and that's the work that we are doing for Flipkart. So I'll take you into some of the case studies when the team gives you more details of what we do in FAO. But as I said, we are very strong on the telecom infra side. We are doing work with the tech startups, retail. We have also gone international, with assignments like Primus Telecommunication that we have done again in the telecom space. We have set up a shared services for entire of accounts payables, receivables, GL accounting, all the record to report processes. With Starbo, which is a airline company, we have managed their entire accounting. Now this airline company is running out of Africa, Ghana, and we manage their entire accounting sitting at India. So that's the kind of clientele that we carry and the kind of work that we do for them. Now just to give you a understanding of the volume and the scale that we operate in FAO, we work across the industry types: telecom, retail, manufacturing, IT, infrastructure. The kind of volumes that we are handling today is all put together roughly about 1 million transaction as on date, but the composition is more towards telecom, about 300,000, and retail, which is about 500,000 transactions. Now what does that mean is that I may be doing a processing of the transactions or a reconciliation of the transaction or an accounting of the transaction. So I am indulged in one or the other activities, and roughly say about 1,500 crore plus worth of transactions pass through the hands of the Mind back-end, front-end people who are engaged in these jobs. Now as FAO, there are certain standard offerings that we go to client with, all right, and the most popular one is accounts payable. All right, so any company, big, small, medium, very large, micro, doesn't matter. Accounts payable is a need everywhere. So you need to settle your vendors, all right. That gets followed by the account receivable, which is again very important. You need to get money out from the customers. Why it is kept in sequence is that most of the CFOs would, accounts receivable is very close to, the CFO's heart. So they would want to keep it with them, but over a period of time, and I'll show you some of the models where we have successfully turned around the receivable scenario for the companies, and now this area has opened up and further opening up, and we are also strengthening ourselves to keep pace with the market. Bookkeeping and GL accounting, very classical form of service. Even a chartered accountant in the older days, was called upon to write the books, and if you look at it at a different scale and size, bookkeeping and accounting is still the same flavor, but now there is an ERP, there is there are reporting patterns, there are various other things to take care of. So this is again a very popular service and a very strong area for Mind to look into. Mind has kind of got a certain name in the market for this service. Company incorporation and initial setup. Now this is again something where Mind has helped very large brand names from the international market to come and set up businesses in India. I don't know whether you all noticed or not, but Berkshire is a Warren Buffett company where, which set up a Berkshire Insurance very recently in India. The entire of company incorporation, the accounting per se of this unit is done by Mind, as one of its premier clients. Statutory compliances, direct tax compliances, indirect tax compliances. You all know, there is a huge need in the market. VAT, TDS, income tax compliances. You all must be hearing of GST coming up. So again, so this is purely a knowledge base arena where every company again needs these services, and outsourcing is very popular again in this line.
Talking about the company law compliances also?
That's right. We are talking about that as well. Yes. Asset lifecycle management. So management of the fixed assets. Think of how Aircel must be getting its all assets which are located everywhere, almost everywhere in the country. The towers, how they must be keeping track of their fixed assets in those towers. Who must be reconciling them? How do you see your laptops getting the stickers of the serial number and the item number, etc., asset number? So all that is again run in an outsourced model by again small to medium to large enterprises, and we provide this as an end-to-end cycle where we take care of the capitalization as well as the physical verification of the fixed assets.
How do we do the asset management? Do we use any tool for doing that?
Yeah, so that's basis. So there is a platform that we infuse where we take over the entire fixed asset register of an organization, of a company, and from there on the activities of new assets coming in, the assets getting retired, the depreciation run from month on month. So all that happens on that, and the accounting entry of that per se is given to the ERP back.
And does it include IT assets as well?
This includes IT assets as well. That's right. Reconciliation, all kinds of reconciliations, customer reconciliations, vendor reconciliations, very popular bank reconciliations, inventory reconciliations, asset reconciliations. So we are doing all types of reconciliations. I would say we have done data reconciliations, and we are offering this as a standalone service, as most of the clients who have large volumes, they end up asking for reconciliation as a separate activity, and this is a standalone service offering from us.
That means they have their own finance people doing it, and then you do reconciliation. Their people are there.
Mostly, if you see in the area of customer, where the CFO has his own structure to look after the recovery and accounting, but the customer reconciliation is a task which is a task in itself, which is a standalone task. So they need somebody to call up these customers or to go to their business places and reconcile the accounts. So let's say take an example of Aditya Birla retail chain, which is More. So More sources merchandise from various different vendors, and that is spread all over, and the merchandise goes directly to the store from the vendor place, and vendor will also have, or I'm taking a vendor example, and vendor will have its business places or warehouses located in different cities from where the bill was generated, right? And then you have a settlement within a particular city for various stores, more stores with that particular vendor. Now, how does that happen? So where they are happy settling them through their own structure, but they want somebody to reconcile the financial transaction between the vendor and More. All right. So somebody needs to call up the vendor, somebody needs to ask for the statement, reconcile it, get the sign off from the vendor, and close that particular period, which could be a month or a year or a.
So it would be kind of an audit also.
That's not really an audit. That's not an audit. So we are not representing this company as an auditor. Rather, we are representing their finance center or transaction bodies, and we are saying that whatever you have entered into, we would like to reconcile that. So that's more of a cyclic activity.
Do we run software compliance as well as a service?
Not really. We don't do
Do we
that.
intend to, or it's a different domain?
It's a different domain.
It's a different domain. It calls for a different expertise, I believe. Now we spoke of the towers or the service offerings, main service offerings, and then we have in each of this. So on the AP side, it's not just a settlement of the vendor. You have travel and expense claims coming up from the employees of the organization, and at times they can be as high as running in thousands. We recently tied up with Snapdeal, which has expanded to close to 10,000 employees now, and most of their people who are dealing with the sellers, they're traveling all the time. They're coming back and submitting their vouchers, and they need plug and play solution, all right, where these people can come, they can claim it on some web interface, then they can submit the claim, and then they can get settled, all right. So that becomes a modular piece itself. So that's part of accounts payable services, process to pay or procure to pay, help desk services, where vendors can call up and check the status of their invoices. One of the things which is catching up very fast with all the organization is need for analytics. Everybody wants to look at the data, the trends, the aberrations, the disruptions in their usual business. So BI is what you will see every company is talking about today, and we are providing that again through technology. Again, there is a partner who's working now closely. Amit has been part of some of the discussions earlier with us on that. Likewise, on the order to cash, which is the receivables section, you will see right from the order management to setting up a credit control section, collection accounting, collections in the field, help desk for the customers, and the record maintenance or the master maintenance for the customers. Again, on the record to report is the entire accounting piece. You have the general ledger accounting per se, the reconciliations, fixed assets management I have covered already. Audit support, now that's very important. So once you outsource your accounting to someone, you don't want the partner to only give you a books of accounts. You want that partner to take responsibility and be accountable to get the books audited. So we provide end-to-end services there, and you'll be happy to note that we are today, our people, our team clusters, they are all getting audited by various big four firms in India, large firms in India, and we are coming out with flying colors in that segment, and that's what is establishing the model more further ahead with the customers. There are two things. So even the certification that we have got for ourselves is done through Grant Thornton, and when we deal with large enterprises such as Indus Towers, such as American Tower companies, such as any of Tecum Shah, such as any of those large brands, so they all have one or the other big four auditing their books, all right. And what we do is very key part of their finance process. It could be accounts payables or a receivable. So we don't leave the process when the transactions are processed. So the auditors generally turn up to our sites. They look into the process. We are accessing their ERP, the client's ERP. We are putting in transactions there. We are responsible for reportings, the numbers which have gone. So they want to sit with us, understand the process, and get their confidence. And some of our history shows that the audit scores have been uplifted. So every large enterprise has got an internal audit, internal control and audit scheme, which they get done through a independent body, and then the independent body at the end of it gives them some score, as in where do you stand. So in a very recent case for Indus Towers, when we had picked up the process, we stood at some under 50 kind of a score, which the first audit results when they came out, that was told to us, which was in the first 3 months of takeover. And today they stand, say about 85 plus, all right, and this has been a journey of close to 4 years plus, where every year the score has gone up. So, and that has gone up by way of many things, but primarily was the experience playing. So we have an experience of managing the similar process for other large clients, and that same experience was applied here. The control lacunas were figured out, the risk assessment was carried out and then put forth to the CFO, and then the recommendations were implemented and the score was brought up. All right.
Sir, I have two doubts.
Yeah, sure.
The cash application, is it a way of taking payments?
No, that's once you have received the collections from the customers or payments from the customers, whichever way you look at it, you need to go and account for it in your books.
Okay.
All right. So I sold like mine sells services to various customers, and the customer pays, and now I need to go back and knock it off against those specific invoices.
Okay, so applying that cash.
Applying that. So that's a cash.
And the
application.
second thing is, do we collect directly from customers for financial instruments, say loans, and collect for that?
Not really loans, but what we do is for any of the businesses that I have shown to you on the other slide. So let's say a company which is selling products or services. So we do collect for them as part of our service offering.
Okay.
That's what it is. So that these are the field services where we have team clusters in the various places, like Mumbai takes care of the western part of it, and Bangalore looks after the southern side, and Delhi is looking after the north side.
So physical collection.
Physical collection. So there the team clusters are present there. You know, when the client is signed up, then these people are given the training, and then they go to the customers of this client, basically, and then they kind of reconcile and get the money collected. So that's not really the loan recoveries, which are these team clusters are the white collar people. They are either MBAs or commerce graduate people. They represent the finance and accounting side of the things. You know, so they are more of enterprise collection people. You know, they are not the just the B2C, as in the business to customer.
These are more of the receivables, not
These
the
are
loan,
B2B.
not the loan.
Yeah.
Bank funds and collections, default, not that.
So these are business to business mainly. We do B2C as well, but that is in a very specific segment. Let's say you sell to the doctors. Okay, you sell equipment to the doctors. Now how do you get the money collected from the doctors? So that B2C we do. But then there is another micro level collection, such as how Vodafone manages its collections. You know, you see those people calling up and asking for the money. That is also a recovery service. But we so far have not got into that arena. Now, apart from the standard service offering, what we also try and do is cut out industry specific solutions, which are very important in today's times, and that's where the innovation comes into play very much. Now, I've brought together some of the examples of it. Let's say for the e-commerce industry now, where the AP and AR and bookkeeping and all those standard offerings do apply in this e-commerce segment as well. But for e-commerce, there's something very specific happening in their business model. All right, an e-commerce company typically has a hub and a spoke model. All right, because they are meeting, or they are looking at the last mile connectivity. All right, you are putting an order on the app, but at the end of the day, they have to deliver it at your doorstep. All right. So be it Grofers or a Snapdeal or any of the companies. All right. So how the delivery takes place is that they have the various outlets, hubs, okay, created. So you will not know that one of the hubs will be running maybe somewhere very near to your place where you stay. All right. So now wherever there is an outlet, there is an expense. Okay. So you need to pay for the delivery expenses. The delivery boys are coming, they are putting in the petrol, spending something in the field. So now what happens is that becomes hub expense, all right, and you need a model to service that. You need the model to manage that hub expense. So, and that's very specific to this kind of an industry. Now this may apply to some other industry segments as well, but e-commerce is a pertinent example here.
So the city is divided into hubs.
That's right.
So they manage the whole thing as a hub.
That's right. Likewise, they manage large inventory base. So I happen to go into one of the warehouses. We do the warehouse management activities for various companies, and I was zapped. One warehouse of Snapdeal was carrying more than 300,000 articles. So 3 lakh articles in the rack. So once you enter that warehouse, you will see that you have come to a place where you can only see the large iron racks, as long as you can see, and those are all the shoes and the whatnot is just stuffed into those places. Now what happens is that you need to audit that. All right, what's going in, what's coming in, what's going out, what's coming in, how the inventory is being managed. So inventory audits is again very specific to e-commerce. Sales collection reconciliation process. So what happens is that a typical need is that, as I earlier mentioned, that 100,000 transactions every day. And we all know that in today's world what happens, I would like to pay by an e-wallet, and a friend of mine wants to pay every time a cash on delivery kind of thing, and another colleague of mine, he wants to pay through a payment gateway. He wants to use his bank account to have the money directly debited out of it. Now as a result, what is happening, the business is having a certain need. Now the business requirement is that whatever 100,000 transactions they have got into, whether the money has come in to the business back for those 100,000 transactions or not. All right, and we all know that when you all have these sources of money coming in, you all need to tie them back. All right, none of these sources gives you a automated reconciliation today. All right, so payment gateway pushes money into your bank account at the end of the day or at the end of the transaction, each transaction. Maybe the hub people or the courier people will go get the money COD, back to the business, and a e-wallet company will also settle separately. So you need to kind of have a reconciliation of that all. That's again an e-commerce specific item. We do that, and we do that for Flipkart. That's one of the larger players. Warehouse logistics process audits, again very important area. So now you have these many warehouses, you have greater exposure, high exposure even to the tune that you have a capability of dispatching, let's say 1,000 orders, but you are not able to dispatch more than 600 because your processes are not tied up. You don't have even SOPs in place. So we also support them, and this area is handled by Sanjay Nanwal, who looks after the quality side of it. More to do with supply chain management. That's right. You're right there. Vendor and seller reconciliations. Already spoken in detail about it, so you are all familiar with this. Now this is, and any of you who's going to go and interact with the customers or potential prospective customers, this is a very popular service for the e-commerce segment. Likewise, we jotted some of the specific industry offerings for the retail side, though not much different, but still wanted you to kind of find a differentiation while we talk, so that you are you get familiar with the innovation that we have to do with each industry segment. Now, if you look at it, let me just pick up which one I should. Now, if you recall, what I spoke in the earlier slide is the cash management. Now, what is happening that you are selling? You are selling on an application, the web application. The customer is coming onto that in the comfort of his home, and and the company ends up supplying it at the doorstep. Now, if you look at in the retail industry or in the food industry, you go to the counter, you buy, let's say, a burger, and you pay it on the counter, and then you walk away with your burger and eat it and forget it about it. Now, what happens is that the counter cash has to be tallied at the end of the day. So the company typically goes and enrolls for a CMS service, and the bank boy will come and pick up the cash from the counter and gives a receipt to the counter boy and goes, all right. But still there is a need, because a customer would have come with Sodexo coupons, a customer would have come with let's say some discount coupons, a customer would have come through a credit card, or now there is a payment through the e-wallet. All right, he wants to tap out or transfer the payment through alternate channels. So now the need is that if I sold let's say 10 lakh worth of goods over the counter on a particular day, now has the business got 10,000 back in the account or not, through these different channels. All right, so we do a DSR activity for the retail, and then we
What is that
also
called, what you said just now?
Yeah.
What is that called?
We call it a daily sales reconciliation. So that typically gets covered in the sales accounting. So what we do is before we do the accounting for the sales for the day, we kind of try and reconcile it and then account for it, basically. Cash and inventory verifications at any point of time during the day. The risk that these outlets run, the food outlets or any of these departmental stores, that the cash is pilfered or the yeah.
So the daily sales reconciliation,
Yeah.
is it by use of technology or people?
This is by people. This is a service.
So manually.
It's manual. Why? Because the technology is already there. So you have a point of sale system which throws the data. You have ERP where the accounting has to be done. So the point of sales and the ERP in most of these scenarios are integrated, where the accounting is going there. So what we have to do is we have to apply a checker onto that. So the service is that whatever POS is saying and the ERP is accounting, whether the sanctity of that is maintained or not. So because the bank collection, which the customers who would have used their credit cards, is not the amount in the bank is not coming on the same day or at the same time.
Yeah.
So it'll come, let's say, with some time lag. So what the fundamental that we operate in, that what is the percentage of your sales that gets reconciled on the same day. So in a good scenario, that goes up to 99%. So your exposure is 1% of the sale. But in not so good scenarios, the percentage could be as low as under 80%. So 20% of your sale is at stake at any point in time. That probably I just walked into the outlet and I said, hey, look, I'm friend of your CEO. Why don't you give me a couple of burgers free? All right, and the counter boy did not realize that because he's going to be cutting the bill. In the other case, the counter boy generated the bill which the customer did not take. All right, and the next customer also ordered something similar, and then he did not generate another bill. So he is going to give the same bill. So what will happen? So the cash is going up or down somewhere. But as a business, I need to make sure at the end of the day, if he sold 10,000, I need to have 10,000 in my pocket, right, in my bank account. So how will that happen?
So our people are sitting at the counter?
Not really. Our people are at the back end. They have a control over the POS and the ERP. So let's say just to give you an example, we are doing it for Burger King. We are doing it for Pizza Hut. Okay. So Burger King at the end of the day, their POS is running through the day. So the boy sitting in Mind office is pulling the report from the POS at the end of the day. All right, which happens, let's say, early next day. So the counter will get closed by 10 o'clock or 11 o'clock in the night. So Mind person will pull the report out of the system at 9 o'clock in the morning of next day. Now he pulls up that report. He asks for the CMS receipt, which the bank has come and picked up the cash from the counter, because that happens also around the same time next day. So he picks up that what cash he has taken and reduces that from the total report. So that cash is saved. Now he says, what are the various other differences? So how many of the coupon sales, how many of the credit card sales, so whether that value is coming back into the account or not.
Every day there are gaps?
Every day there are gaps. There are gaps. So we need to keep.
That's our job to do that.
That's our job. So we need to give the assurance of that 100% of the sales is reconciled before you close the month for that particular month. So we kind of again, so SLAs are around that 99.99% sales should be reconciled. So the business is ready to take 0.01% as a hit.
So this in conjunction with the inventory audit can help a big chain like Future Group
Absolutely.
reduce shrinkage.
Yeah.
That's
Like I'll tell you what we do. So one is a cash, which is a back office activity, which I just explained, which is a pause versus that's an ongoing activity that we do. The other, which is covered here, which is sales accounting and audit of that. Now, what is covered here in the cash and inventory verification is another important aspect. Let's say one of our clients, Mad Over Donuts. I don't know whether you have heard of that or not. Or try their donuts sometimes. It's good. So Mad Over Donuts ran into this issue that you can make. So the company standard is that you can make 40 donuts out of a pack of wheat flour that they have. All right, but a good baker can make 60 out of that. Okay, so your standard, if you understand the standard costing and all, so that all goes for a toss, because your bomb that you have fed in will not throw you the exact consumption of the raw material, right? So what happens is that you have produced more than what you should out of the given quantity. So the inventory audit becomes very important there as well as you have, let's say, you have not sold it on the invoice or bill, okay, and then there are variances. That is another case. So there we got into an engagement where our field staff will walk into the store at any point in time during the day and will have a surprise mystery audit or a surprise audit. Mystery audit is somewhat different. We do mystery audits as well, but here he will walk into at any point in time during the day. Will look at what is the cash in the till, which is the cash register, and tally it with the sales, as in what was the opening balance, how much more sales has happened, and also go to the counter and see that for that particular item code, or if you have a chocolate donut, now for that particular category, what is the stock that you should have and what is the stock that you actually carry. So that gives you the difference, and by way of which the company is kind of, the CEO is getting an assurance that the processes are running fine. Nobody's pilferage is a very big risk that these companies run. Outlets, departmental stores, people just walk out with some items without getting it.
How do you reconcile it?
No, you pick up.
Physical check, who does?
It's a physical count.
We don't do.
We do as part of a separate service. So where there are field staff, appointed in all these bigger cities. Typically, these chains are coming in what? Mumbai, Pune, Bangalore, Hyderabad, Chennai, Gurgaon, Delhi. These are the hot spots.
Yes.
So, and we have team clusters in almost all of these places, where there are like 5-6 people team in each city. They're walking into a store of, let's say, a Burger King, then walking into another store of Mad Over Donuts, doing the cash counts and every day. It happens every day.
And when they
Frequency is more decided by the client.
If you are in the night or?
No, it could be at any point in time.
Oh, any point. It's like a surprise.
It's like a surprise check. So that, it's more like an independent view taken whether the controls are high or not. Right? So, and it's not with everyone. Like, this donut company has a great risk. It's a new startup, Mad Over Donuts. Donuts are, like, they run various kinds of scheme. You buy 3, get 2 free and stuff like that. So the count is always a problem. And each donut is like what? 60, 70 odd bucks. And you end up selling, let's say, nothing short of 500, 700 donuts a day. Right? So you have a greater risk. So they are happy to kind of have these kind of controls in place, and that's why we call it that these are very specific to the retail industry. Now that's what I have not covered in the standard offering. So when we are going and talking to a retail company, we tend to talk around these service areas.
But in the donut example, it could be excess also, huh?
It could be excess also.
They tend to show that in the wastage, and whereas they at the end just sell it without raising a voucher or raising a bill. They claim it as a wastage in their stock and they sell it in cash. So So this is the money for them. So even if it is an excess,
Correct.
then that is an audit check we apply and get benefited.
Yeah.
So they are so smart that you will never find an excess. So what we do, and that's very interesting. So what we do, we had to figure out again an innovative way to handle it. So we had to weigh a donut. All right. So each donut should be 60 grams. Okay, a raw donut. And if somebody is producing more, then the weight of the donut he cannot keep as same. He cannot maintain it because it's just the baking jugglery that he is doing, that he is baking it at a different temperature and trying to kind of give it a same look. So a donut weight will tend to come down if he is producing more.
There is some wastage and all that. I'm sure that is accounted. I mean.
Yeah, and another.
Right? Something
No.
like
So
wastage falls on the floor. I mean, some room, I'm sure.
Yeah, so what happens is that in all these companies, so they have a standard bill of material. So they have a standard quantity, a standard pack that converts, let's say, 40 pieces. Now you can convert at the most 42 or you can convert 38. But the weight difference will be negligible in that case. But if you are converting, if somebody is intentionally producing 60, then the weight difference will tend to reflect in the whole thing. The other thing is that a donut has a shelf life of say 12 hours or 18 hours. So at the end of the day, the outlet has to necessarily dispose of those donuts which are not sold. Now there again there is a pilferage. So an outlet may say that, look, I disposed 100 off, wherein actually he sold 50 out of it without bill. So these are all the wrong practices. So a surprise check around the evening time helps us get a control over it. So one specific thing that I wanted to cover up with all of you was the experience. So we do not just carry the experience of managing an activity, but we are also working closely with very large enterprises or enterprises which are aspiring to be large, to set up the strategy of shared services right from the beginning, where one needs to kind of assess the kind of activities which can be offloaded into a shared services or the kind of activities which is best managed by them, because a typical thing that we come across is that I want to outsource, but I do not know what exactly I can outsource. The other is that the whether do I do myself or can I outsource it? All right, and what if a client was managing it in its own environment, and now it has to be brought out? What are the advantages that we will be able to drive? HCL is one of the examples. HCL Infosystem has been, they have been doing their accounting and finance operations themselves. They have been managing it. It's like 30-year-old enterprise. Many times in past the idea would have kind of come in the minds of CFO there or the board that they should outsource, but they never could take that leap. But here, when we got into the scene, we had to present case studies. There were other players as well, how it will benefit them over a long term, how it will benefit them over a short term, what kind of economies that they'll be able to have, what kind of controls they'll be able to exercise further to what they are exercising. All that was to be kind of deliberated, and at the end of it, HCL kind of was convinced, and they are reaping the benefits of the outsourcing today. So first of all, we have to be convinced ourselves, and we have to convince the client on that. So today we are carrying that track record, that experience with us, where we are able to kind of give some examples to these larger organizations that what we have done in the past, and that's kind of giving us a confidence to move ahead in the market. And the process transformation. Now we are dealing with a particular case in point nowadays, where a large automobile, they are the original equipment manufacturer for Maruti and various other Nissan and Honda and whatnot, and they run like 16 different plant locations. So there are 16 discrete plants, which are running. Some of them are profitable, some of them are not profitable. A plant could be generating a revenue of 30 crores, another plant is generating a revenue of 300 crores. And each one of them have their separate finance structure. All right, now the requirement here is not to just consolidate, centralize, but to transform operation, but to see what kind of technology is going to be helping them in managing it more efficiently. How will it all happen? So we take it into helping them take a leap onto the finance operations and not just let them manage it in a classical manner that outsource kar dijiye and then everything will be all right. No, that's not the way. Now what we tried looking at is that to give you all an understanding of how the philosophy operates for the solution offering in the market, which I think Sandeep also wanted to understand. So what we have done is we have clubbed all the companies that we work for as under 100 crore companies as small and micro companies. We have looked at the medium enterprises which are 100 to 250 crore turnover, large enterprises more than 500, and then the very large enterprises which go beyond 1000 crores, right? And what we have tried looking at is the basic nature. Now this is what you wanted to understand, so we are covering it in some manner. And you can add to this because this is from a very high level kind of understanding perspective. So a very small enterprise typically is either a startup or a relatively newer business. They are into their setting up of their business model. That's the understanding that we get now with our experience. A medium enterprise looking to outsource typically is running the scaling up issues. They want to really take a leap into becoming a 500 or 1000 crore organization. Diversification is right in front of them. We have many cases or examples to discuss here where they wanted to kind of diversify and not sure of how will they scale up. Setting up of processes when they were very small that they never thought of that the processes will play an important role. Large enterprises, again scaling up issues are continuing, but more things add up to that. Policies around the finance and accounting procedures, what they call SOPs are becoming more important. Control and governance setup. Now this becomes very important for the CFO, that how do I govern my business and control my business, because now the size of the business has grown that much. All right. And for a very large enterprise, where they would have done their SOPs and process setups, but now the volume issues, right? So the volume is multifold of what they were earlier, and then they run the consolidation issues, right? Now I have grown that much big. Now how do I kind of bring it back into my control in a manner that it's efficiently run and also economically run? I'm talking about the finance operations here, so you have to kind of read it in that conjunction. So the philosophy that we try and inculcate in the people who are working in the market or in the back office is the apt fit for this is a complete accounting solution that we kind of go and offer to these players which are very, very small in size. The compliances is an immediate need for a company because they don't want to run the risk. Incorporation, ROC related compliances. So these are all the services that you would want to offer to a very small company. You really don't want to go and talk about, hey, can I do your transaction as a standalone activity? No, that's not the idea. So you offer the solution which is needed by them.
Example could also be the license offices, branch offices, multinationals opening up their new setups in India, and they need the support. Typically, they take the support from Big Four. Typically, and
all the registrations, the different compliances.
Yes.
Say under the labor laws, the company law, the
tax laws, indirect taxes, direct taxes. So mostly these are organizations with 3 people, 4 people set up. Expats have come in, or new hires have been done, and they will scale up in next 2 to 3 years. And then in this interim period, they don't have a CFO or they don't have people in place. So that's when they need all of this.
And then we move up in the value chain and we go to a company which is aspiring to be large, which is already doing a reasonable size of business, which is say 100 to 250 crore kind of a turnover. Now what becomes very important, and that's our experience with them, is that you tend to give benefits to them by modularizing some of their functions. Let's say we are managing an accounts receivable service for a company which is into VSAT equipment. They are say about 300 crore, come 250 crore company, which is huge, and they are at a scale where a function is now large enough to be taken up as a standalone activity. So accounts receivable as an order to cash activity is now having a certain volume. You need to give a solution there. It's not just about people. When you were here, you probably would have put in a body or two to manage your accounting section as a whole. But over here now you need some of them to just focus on one particular finance activity. And of course, a shared services model which comes into play for, if the company is looking to diversify and now, you want to kind of grow, but you don't want to invest in that kind of a cost. So from Mind, you can make use of the shared services, where there is a shared consultant or a shared manager is deployed. Now, when you come to the very large enterprises, the area of opportunity opens up now. Now there is no longer a need of that, you manage the way I was managing, or probably I am doing it on Tally, you can continue doing it on a Tally. Now over here, the business size is getting larger, and now you need a solution. Now you need a sort of a consulting advice, a consulting support. Now you need the standard operating procedures to kick in. So now you need support to kind of manage your processes. You have the transaction volume going up, and now you need services around transaction management as well, and that's where the services from Mind will come into the play, and automation, of course, which is very important aspect.
They really don't invest in automation. I mean, ERP is fine, but then they struggle if they have multiple branches or multiple locations, large volumes. So let's take an example of where we have picked up end-to-end is, let's say, Burger King, which when came into India was a small enterprise, yet to launch. They became medium within a span of 3 months. They launched, let's say, 20 restaurants in a span of 3 to 6 months time frame. Now they're planning to be 170 or 80 of them in a year from now. They will certainly fall into large enterprise.
So
And
the leap is actually from small to large instead of being in the medium.
yeah, and they do not have, I mean, they will invest in either Microsoft ERP or SAP ERP, depending on what their investment plan is. But then the ancillary systems, they will take time to settle down. So that's an example. Groffer is another example.
That's right.
Growing from zero to target is 1,000 crores and above.
Now, Alcon is another example where let's say where you have grown to a size, where now if you keep managing in your old classical way of managing it, that I can do it on a spreadsheet or I can do it on my ERP, whatever is there, it's just not possible, or it's just not effective enough. A CFO will not get what he wants to have, or a process will not get managed the way it should be managed. Let's say you will end up infusing more people and increase your cost and not reap the benefits of the available automation technology.
They don't invest in ERP to that extent that a 1,000 crore enterprise will invest. I mean, their implementations are mean and lean, more like a business GL kind of a ERP, and not like a full-fledged ERP, mostly in this scale. So, and that's where they need our expertise. Then when they're scaling up, typically the issues are that the finance team has not seen a large enterprise, or they have not worked in a larger enterprise, let's say. So obviously then the scaling up is a learning phenomena for them also. But on the flip side, if you go to, I mean, like recently I went to Lenskart. Their CFO has come from Bharti Walmart. So he's seen a larger enterprise than a smaller enterprise. So for him, the issues are not of that variety. So it also depends on who you are
Yeah.
dealing with on the other side.
Yeah. And then moving on to so the idea is that not that these things do not apply to them. All right. The idea is that as you move up in the value chain, there are more prominent solution offerings that are there. And when you go to very large, I was taking an example of this automobile component manufacturing company where now the thing is the transformation of the finance processes. It's no longer that you manage the way I am managing. That's probably not going to solve my need. Even HCL. So where you have to bring in a newer way of doing it, you have to give me a makeover or a transformation of the way I was doing it. Probably those are not the best ways, or those are dated technologies or methods. So you give me a transformation strategy overall, and that's where we go up in the value chain.
So let's say we were looking at it that Idea has not set up a shared center as yet, whereas Airtel, Vodafone, Aircel, all of them have set up a shared center. So that's a right related example of a transformation strategy where you can play a role in transformation of the cycle.
So there are 5 pillars to the FAO business. So Kaushik, Ramesh, Karan, Sanjay, Puneet, and of course there are many important people other than them as well. But let me take you through the structures of each of them so that you are familiar with the structure that you are going to deal with at any point in time. So Kaushik represents the operations management for the VHT, which is the army of people in the front end. So we spoke about 500 people layout, 200 back office, 300 scattered, distributed in various cities. So VHT forms part of those 300 people, large workforce, close to 100 odd people, 120 people.
What does it stand for?
It's a vendor help desk. It's part of the accounts payables section, where the vendor management is happening at the front end, where the invoice is received in or the checks are placed. Then the asset management services, which is a fixed asset cycle. We spoke of that, right from the capitalization, which is a back office, to the physical verification of the assets, or even the inventory also comes here. And then the accounting services, which is the bookkeeping, the T&D, which is travel expense accounting, and the taxation bit, which is the compliances bit. So that all is part of Kaushik's area. Then is Ramesh Bish. Ramesh is part of this discussion right now. So Ramesh has got regional ops under him. We have a manpower business as part of FAO. So there's a manpower business which is separate than this, which is run as a separate entity itself, which is apt outsourcing. I'm sure now you're familiar with the organization structure. But this manpower is part of the FAO structure. Some of our existing clients, ask for the help. Their controllers. They're in the transitionary phase. The controller is going out, new controller is coming in, or their finance folks, or they are ramping up. They need people on a temporary basis. So, and we have good capability over here, so we try and support them on this. And then we have a separate planned position for the innovation and strategy bit, where we are working on the technology part, the newer applications which are becoming available, the newer service offerings that need to be developed. So that's part of the innovation. And the growth, where we are supporting the structure, the entire business development structure, what happens, and this is what I would want to talk to you as part of this discussion. When people have showcased their sections, maybe we can spend half an hour on how you will all be able to collaborate. If you want to refer a new lead or a business, or what kind of support will you get from the back end when you are out there in the market, all right? Because you'll need to kind of converge a lot with people who are shown here. So that is the growth side. So what happens if a RFP is there in the market? What happens if somebody calls you and says that, hey, your company does that, can I take help from you? And what do you do after that? So he looks after the growth side, where we kind of try and synergize with the business development team and with the people who are managing the clients directly, basically, from the operations side. And then there's a AR structure. So the entire of operations are led by Sunil Yadav, who's presenting the AR thing today. And then there is Karan, who looks after the consulting bit with me and manages this section. And Sunil is supported by a few of the managers. Anand is one. Kaushal looks after the back office operations for him. And again, you are going to come late. Yeah.
But वैसे ही comes and finds.
So Puneet is consolidating shared services for finance transactions. AP happens to be the larger area there, and his operations are divided in two facilities. 280 is signifies the work location. So 280 is one office address and 835 is the other office address. That's how we know them. This plot 280 and plot 835. So you have two shared services, as I mentioned in the previous slide somewhere, the 200 back office workforce. So they are distributed in these two centers mainly. So Prateek manages the 280 operations run out of 280, and then Jagdeep, who has joined new and part of this session, so he is supposed to manage 835 finance operations supporting Puneet. So now at this point now, Sunil, I'll request you to take over and give them the receivables.